In April 2025, Chipotle reported a 0.4% decline in same-store sales, its first drop since the pandemic. It seemed like a small dip, but behind that number was something bigger, a shift in how people spend, save, and feel about the economy. When one of the most recognizable restaurant chains sees fewer visits, it's not just a business story, it's a signal of rising prices, of cautious consumers, of deeper pressure building beneath the surface. Let's unpack what this subtle slowdown reveals, not just about Chipotle, but about the economic mood across the globe. Chipotle Mexican Grill, with over 3,400 locations worldwide, is a leader in the fast casual dining sector, serving fresh, customizable meals to a diverse customer base. From students in New York to professionals in London, Chipotle's appeal spans income levels and cultures, making it a unique lens for understanding consumer behavior. Restaurants like Chipotle are often early indicators of economic health. When people feel confident, they dine out more. When uncertainty looms, they cut back. In the first quarter of 2025, Chipotle's earnings painted a picture of a consumer economy under pressure, reflecting broader trends like inflation, trade tensions, and shifting spending habits. To understand this, let's break down the numbers and explore what they mean for businesses and consumers globally. On April 23, 2025, Chipotle released its first quarter earnings, revealing both growth and challenges. Total revenue rose 6.4% to $2.9 billion, driven by the opening of 57 new restaurants, 48 of which included Chipotlane drive-through lanes. However, comparable restaurant sales at stores open for at least 13 months, fell by 0.4%, the first decline since 2020. This drop was driven by a 2.3% decrease in transactions, though a 1.9% increase in average check size, likely due to a 2% menu price hike in late 2024, partially offset the decline. Net income grew 7.8% to $386.6 million, with adjusted earnings per share at 29 cents, slightly above Wall Street's 28 cents expectation. CEO Scott Boatwright highlighted two key factors: unfavorable weather and a slowdown in consumer spending starting in February 2025. He noted, consumers were saving money because of concerns around the economy, reducing restaurant visits. This trend persisted into April, signaling deeper economic concerns. Rising costs also pressured margins. Food, beverage, and packaging costs increased to 29.2% of revenue from 28.8% in the first quarter of 2024, while labor costs rose to 25.0% from 24.4%. These increases reflect broader inflationary pressures and labor market challenges, which we'll explore next. Chipotle's declining transactions mirror broader consumer trends. The Conference Board's Consumer Confidence Index dropped to 86.0 in April 2025, the lowest since the COVID-19 pandemic, with the Expectations Index falling to 54.4, signaling recession fears. Similarly, the University of Michigan's Consumer Sentiment Index showed a slight recovery in June, but remained 20% below December 2024 levels. Consumer spending data tells a similar story. The Bureau of Economic Analysis reported a 0.3% decline in real consumer spending in the first quarter of 2025, the first drop in nearly 2 years. This slowdown was particularly evident in discretionary categories like dining out, as consumers prioritized essentials. Income disparities played a significant role. Lower-income households, earning less than $25,000 annually, reduced restaurant visits from 54% weekly in 2021 to 50% in recent quarters, while higher-income consumers were less affected. This reflects growing economic inequality, with lower income groups feeling the pinch of rising costs more acutely. Chipotle's digital sales, accounting for 35.4% of total sales, highlight a shift toward convenience as consumers seek value and efficiency. However, the overall reduction in visits underscores a cautious consumer mindset, driven by economic uncertainty. External factors amplified Chipotle's challenges. The Trump administration's tariffs, including a 145% rate on certain Chinese goods, increased costs across industries. Chipotle estimated these tariffs would raise its cost of goods sold by 0.5 to 0.6%. For consumers, tariffs drove up prices, with apparel costs rising by up to 64% in the short term, eroding purchasing power. Inflation also played a role. Food away from home prices rose 49.5% from 2014 to 2024, outpacing overall inflation at 34.3%. Chipotle's 2% price hike in late 2024, its first in over a year, was a response to these pressures but may have deterred price-sensitive customers. These factors created a feedback loop. Higher costs led to higher prices, which reduced consumer spending, further impacting Chipotle's transactions. This dynamic is not unique to Chipotle, but reflects challenges across the restaurant industry, which contributes 3.3% to U.S. GDP. Chipotle's experience offers valuable lessons for businesses and policymakers worldwide. First, adaptability. Chipotle's expansion, with 57 new restaurants and plans for 315 to 345 more in 2025, shows the importance of diversifying revenue streams during economic uncertainty. Businesses globally can learn to invest in new markets or channels, like digital sales, to mitigate risks. Second, consumer focus. Offering value and convenience is critical. Chipotle's introduction of Chipotle Honey Chicken drove incremental transactions, showing how innovation can retain customers. Third, policy balance. Policymakers must weigh trade protections against their impact on consumers. Tariffs, while aimed at protecting local industries, can raise costs and dampen confidence, as seen in the 1 to 1.5% rise in consumer prices projected for 2025. These lessons are relevant beyond the U.S., as global businesses face similar pressures from inflation, trade policies, and shifting consumer preferences in regions like Europe, India, and Southeast Asia. Chipotle's first quarter 2025 earnings are a microcosm of the consumer economy's challenges. The 0.4% drop in same-store sales and 2.3% decline in transactions reflect a cautious consumer base grappling with economic uncertainty, inflation, and tariffs. Yet, Chipotle's resilience, seen in its revenue growth and expansion plans, offers hope for businesses navigating these turbulent times. For global professionals and leaders, Chipotle's story underscores the need for adaptability, consumer-centric strategies, and careful policy considerations. As we move through 2025, will consumers regain confidence, or will economic pressures persist? Thanks for watching. If you found this video useful, don't forget to like, share, and subscribe to the Capital Compass, so you won't miss any future deep dives into the forces shaping our world. See you in the next video.